Hey everyone, welcome back to Corporate Decoder, the place where we decode all the corporate jargon. Today we're diving into a Form 8K filing. It's like getting a corporate memo, but instead of office gossip, we get information that could affect the company's stock price. And trust me, with this one, there's a chance someone's getting a little richer. So what's this report about? Basically, it's about RCM Technologies giving out some performance-based stock awards to its top executives. Think of it as a bonus, but instead of cash, they get a chance to earn more stock in the company if they hit certain goals. It's a way to motivate them to make the company perform better. Let's break down who's getting what. Bradley VZ, the executive chairman and president, could potentially get a maximum of 62,500 performance stock units or PSUs. Kevin Miller, the chief financial officer, might receive up to 18,703 PSUs. Now, these aren't just free shares. The key word here is performance. To actually get these PSUs, VZ and Miller have to meet specific targets related to EBITDA, which is a measure of the company's profitability. It stands for earnings before interest, taxes, depreciation, and amortization. In plain language, EBITDA shows how much profit a company makes from its core operations before accounting for things like debt, taxes, and wear and tear on equipment. The performance period to achieve this runs from late December 2024 to early January 2026. So a little over a year to really make the company shine. If they fail to make the magic happen, no extra stock for them. There's a catch, a good one for the executives. If there's a change in control, meaning another company buys RCM Technologies, or if VZ or Miller were to die or become disabled before the end of the performance period, they get all the PSUs, no matter how the company is doing. This is called accelerated vesting. So even if they don't fully meet the performance goals, they still get the stock. Now, what does all of this mean for us? Well, it shows that RCM Technologies is trying to motivate its leaders to improve the company's performance, tying executive pay to company profits. Like EBITDA can align their interests with those of shareholders. It encourages them to make decisions that increase the company's value. However, there are potential risks to consider. The executives might be tempted to focus on short-term gains in EBITDA at the expense of long-term growth. They might cut costs too aggressively or take on too much risk to meet those targets. Also, that accelerated vesting clause in the event of a change in control could be a good incentive for the executives to sell the company, and perhaps not at the best price for current investors. But what about those actual financials? Sadly, there aren't any here. This form is about how the top dogs get paid, not how the company is doing, so no table to decode for us today. So zooming out and looking at the big picture, RCM Technologies is betting on its executives to drive profitability. Rewarding the top executives based on performance is usually something that works. However, it might incentivize them to take on more risk than they would otherwise. Also, a change in control trigger can lead to conflicting priorities if the company is in a difficult financial position. Overall, the company seems to be trying to incentivize its leadership, but it's definitely something to keep an eye on in the long run. Thanks for watching. If you found this breakdown helpful, be sure to like, comment, and subscribe for more corporate deep dives.